Welcome to All That Matters, a show about what's really worth your attention in the markets and economy today. Join hosts Michael Antonelli and Ross Mayfield as they tackle the latest headlines and answer real questions from clients.
Welcome to All That Matters with Mike and Ross. Mike, good to see you. Today we are going to do the analyst version of Tap Dancing Through Minefields, which is to talk about the election. It's 2024 presidential election year. Very contentious, hotly contested. There's going to be a lot of noise this year. So I want to get your thoughts on that. We're going to talk through all the things our clients need to know. But I do want to say up top, what we do here and what we do at Baird, we're not going to wade into the social ramifications of elections. We're not going to tell you how to feel about one candidate, one party, or just how you feel about the political process overall. What we do here is talk about your money, work about protecting your money, and making sure you reach your long-term financial goals. That's what we do at Baird. We talk about elections, and so we nudge close to those topics, but ultimately what we're here to do is protect your money and get you where you want to go. So Mike, with that disclaimer aside, I've heard you describe this year as the year of the big mistake. So you've heard of The Big Short. This is the year of the big mistake. What does that mean? Why are you calling it that?
Thanks, Ross. And thanks everybody for joining us on this, this issue that I'm sure everybody really, really cares about. I call 2024 year the year of the big mistake because I have seen this in my career at Baird. At my career in this industry, I've seen people approach election years and think to themselves, if something happens, if that candidate or that party wins, I want to do something with my money. That has made me so bothered that I feel like I need to make a change. And I call that the big mistake because in 2020, in 2016, in 2012, and 2008, I have seen people make it my whole career. So Ross and I are going to show you 4 different things to help talk you through how the market views elections and how the market has acted throughout history. We want you to not make the big mistake. When you're done watching this, at the end, you're going to promise us through the screen that you will not make the big mistake. And that big mistake is thinking that the market cares about the outcome of elections. The market cares about policies, not politics. We'll talk a little bit about that. But the first thing we want to show you, we have 4 things to show you today. The first thing we want to show you is kind of the history of the stock market and various presidencies, how it's done along the way, all the way back to December 1943. We're going to put it on the screen and we're going to leave it up for at least 30 seconds so you can look at it as we go along. Ross, you've seen this. It's on the screen right now. What we're looking at is Democrat presidents, Republican presidents, the growth of $100 all the way up to last year. And you'll notice something very particular about it. You'll notice this kind of up and right notion. Why is that, Ross? Why does the market why does it look like this?
Well, look, overall, the market is apolitical, right? There are a million things that the market and stock prices care about before they care about the politics of the day. Earnings growth, economic growth, what's happening at a corporate level. What are the big themes and trends in the market? Things like the internet, AI, all the way back 100 years, there have been innovations that have driven economic growth and share price growth as company earnings have grown. So those are the things that drive stock prices over time. And what you see is that, as you mentioned, policies matter, and there can be some impactful policies that help shape how that looks. But ultimately, over time, the trend is up and to the right for those reasons, because earnings have grown, because companies have gotten bigger, because our American companies have done so well, and not because of who is sitting in Washington at any given moment, right? And so the market is apolitical.
Let's put that just back up real quick. I like to play this game when I do my live events, Ross. So you're at home, you're looking at this on your screen, big screen, small screen, whatever. Do me a favor and point on the screen where Apple was founded. So just point on there. It's in the 70s. So do me a favor and point on the screen where Boeing was founded. Okay, it's in there in the 70s also. Point on the screen where Costco and Starbucks were founded. And what you will notice is that those companies were created regardless of who was actually in the White House. Those companies were created by entrepreneurs who had a good idea, who wanted to solve a problem, create a new product, and the people who invested with them got to benefit from that. Aggregate all those together, that's the U.S. stock market, companies and people creating and solving problems. That is what you are investing in, not who sits in Pennsylvania Avenue. That's the very, very fundamental aspect of all of this. You're investing in the companies and what they do and the profits that they make. So I want you to remember that. Ross, the next slide we're going to look at is, I like this one a lot. Okay, let's throw it up right now. It's basically every single president back to Herbert Hoover and a sell-off that they've had. What do you notice about all these sell-offs, Ross? What do you notice that they've all experienced?
Well, yeah, it's the inverse of what we just showed, right? The market is apolitical, but so are bear markets, right? These events are one usually caused by something completely irrelevant to who's in the White House. It might be a currency crisis overseas, or a banking crisis in the U.S. that was brewing for a decade and has nothing to do with who's in the White House to receive that market decline. So bear markets are going to happen irregardless, same as the long-term trend of the market. It has happened regardless of who's in the White House. So your phrasing on it is, I love it. It's perfect. It's history happens to the president, right? Who's in the White House at a given time, right? They shape policy, but these bear markets are, we know as market historians, just going to happen. Recessions are going to happen, and it happens to whoever's in the White House at the time. It's not necessarily their making, and it usually isn't, right?
Yeah. Look at the list, dear viewer. Look at the list. Every president, all the way back to Herbert Hoover, has had a double-digit decline in the stock market during their presidency. All of them, every single one. There's the Cuban Missile Crisis in there. There's presidential scandals in there. There is long-term capital imploding. There's COVID. There's the GFC. Those things, the world tends to happen to the person sitting in the office. Those market sell-offs are the result of events, like Ross said, that have brewed and have happened. And the GFC is a culmination of a decade of things that happened. So I want you to remember that just because somebody sits in the office doesn't mean they're going to be immune from the market selling off, right, Ross?
Yeah, we've seen, a handful of bear markets just in the last 5 years, right? And it's interest rates, it's COVID-19. These are things that were going to happen regardless. These are global, phenomenon that are completely out of control of whoever's sitting in the White House at a given time. So history happens to the president. Just as the market trend higher is apolitical and is driven by earnings and economic growth, sell-offs are going to happen to whoever's sitting in the White House. Whoever wins in November, they're going to have a big correction or a bear market, and you can almost set your watch to that. Go ahead.
Okay, yeah, I couldn't agree more. And just of the two slides we've showed you, history is what we're talking about. History is what occurs in the background to all of our lives. Companies are founded, they make money. Sell-offs happen because the world breaks. What happens though? Let's look at our third slide, our third chart. What happens during election years? We are in an election year right now. What you're seeing on the screen is how the stock market is done during election years. Ross, walk us through this one.
Well, this one is to me, is the money chart, right? That we talked about the long-term trend of the market over time, but let's look at just election years. This is when the news is going to be shouting at you every day about the deeply partisan stuff. It's when it's going to get noisy and scary. And the reality is election years throughout history have just been as average as they could be. They're total nothing burgers in the end, right? Yeah. The average S&P 500 return in an election year going back to World War II is 11-ish%.
Yeah.
Re-election years where an incumbent is running, they're even better. So, the policies that will get shaped over the next 4 years are worth paying attention to, but the election is not till November. So the big mistake will probably happen before that, if it's going to happen. And the reality is election years are as average and milquetoast as they come, right?
Yeah, if you look at this chart, again, this is how the stock market's done in election years. And if an incumbent is running for re-election, okay, if an incumbent is running for re-election, the stock market has been positive in every election year. That would be this year, going back to the end of World War II. You'll see 3 down, like negative markets. All of those were open election years. There was no incumbent running. Why is this the case? Why do election years tend to be good for the stock market? Well, the incumbent tends to promise things to get reelected. That's just how politics works. Reelect me and I'll do this. Reelect me and this will happen. So I think, Russ, that's generally my kind of 2-cent take as to why the stock market tends to do well. But again, the stock market tends to do well in almost any average year, right? You can just pick a year out of a hat, it tends to do well.
Yeah, that's the thing, is this shouldn't be all that surprising, because the market is up, 3 out of every 4 years over the last century. So it's kind of just, by chance. But as you mentioned, and a big hat tip to our partners at Strategas, they have a tremendous Washington policy team. There's going to be a lot of content for our clients and our advisors from them as well. But they pointed this out, that incumbents tend to grease the wheels because they want to get reelected. There is fiscal stimulus in the pipeline right now. And again, this is, however you feel about that politically, we're talking about your money. We're talking about your money in the stock market. And if that's what the stock market likes, then that's what matters for your money. And so I think you hit the nail on the head.
Let's talk now on our fourth slide, our fourth topic here, and that is, we've talked about maybe the presidential election. What about Congress, right? Congress, the president, there's this big makeup of our government. The last thing we want to show you, we'll put it on the screen now, is how does the stock market do under various forms of our government, all the various kinds, right? So D president, R Congress, R president, R Congress, D president, D Congress. How does it tend to do? You'll see on the chart. We'll leave it up. This one you'd have to look at for a little while so you can kind of absorb the data. You'll see a whole bunch of bar charts. The average stock market return, Ross, in any given year is about 9 to 10% in history. Okay, so what you'll notice is all of these things are at least that, except for one on the far right, that R President D Congress, and that one is being affected by the GFC, and then it's being affected by the 73, 74 bear market. So two of the worst bear markets happened under that makeup, and that's why that one is a little bit lower. But if you were to remove that, the returns would shoot right back to average. So one thing I do want to point out, Ross, and remember, we mentioned the big mistake. Big mistake happened a lot in 2020. People thought if this person wins, I want out. If that person wins, I want out. Again, this happens every year. We're gonna avoid that this year together. The one on the far left is the current makeup of our government. The D president, D Senate, R House. That's the current makeup, and it's the best of them, Ross.
Yeah, and it's been a good run in the stock market. Obviously 2022 stands out, but as a bad year, but 21, 23, these were
2021
really tremendous years in the stock market. And as you mentioned, I mean, it just goes back to the history happens to the president, right? I mean, the GFC is pulling that one single bar down, but that was, again, decades in the making from policies shaped way before that makeup was in Congress and the White House. So this is a great chart. It just shows that, however it ends up, it's been positive over the last 100 years, right? There's no combination that is like bell ringing bad for the stock market. And all of them are high enough to invest through and reach long-term goals and beat inflation. All the reasons we actually put our money in the stock market and put our money to work. So definitely worth noting.
I mean, the things we've showed you here today are all evidence-based, what Ross and I call evidence-based, and that is what happened in history. If you were to plop yourself into any given moment, what would happen? None of what we said here is guaranteed, right? Past performance, no guarantee of future results. We know that. These are averages, right? We're just taking all of history and averaging it. But what the data shows Ross and I, and shows everybody, is that the stock market and your money does not root for a certain outcome. What is your money in stock? What does the stock market, your money care about? Interest rates and how the economy is doing and housing and consumer spending and all these things that are ultimately what drives corporate profits. So when I say the big mistake, it is conflating social and financial things together and saying something must be done with my money based on what I think might happen, when history really is quite clear on the fact that what you should be caring about is how are the companies in our index doing, right, Ross?
Yeah. And I just want to say one thing, and then I'll let you wrap us up here. But the big mistake that you're talking about is more likely today, I think, than ever, because one, news media is as pervasive and increasingly negative as ever, right? We get it 24/7. It's being beamed at us from all angles. And it's just increasingly negative. There's been some studies on this looking at sentiment and headlines. And so the big mistake is you have all this coming at you all the time, including us right now. Yeah. And it's separating the news from the noise and what matters for your money. And it's increasingly hard to do. So, we say all that we're saying because we know how difficult it is to kind of put those blinders on and put those filters on when it comes to your money. And so hopefully this has been somewhat helpful today, but Mike, why don't you take us home?
Yeah. I just want to remind you, I'm a history guy, and you'll see a lot of history in my work. The United States of America does not have this perfect record of super, super seamless elections. We just don't. If you were to go back in history, you could even go back to 2000, right? The Gore-Bush thing was decided by 300 votes in Florida. That was no seamlessly perfect election. If you were to go back to the late 1800s, there was an election where they actually didn't know the winner for a long time, and they had to horse trade troops in the South to determine the winner. We don't have this completely seamless, perfect record of just, oh my gosh, the election was great. We know who won. It's nice. We're all done. We're all happy. That's just not how history has worked. Just do us a favor and promise us right now to your screen that you won't make the big mistake, that you won't decide that if something happens in the election that you're going to make some change with your money, because we want to slow that down. We want to say that history has never shown that to be a good decision. All of financial history says that what you're investing in is the long run growth of the United States. And that's what we're here to remind you almost every time. And if you have any questions at all, reach out to your advisor, reach out to us, reach out to Baird. We're happy to talk you through this stuff. Ross, I appreciate you being side by side with me to talk about elections and money. It can be a sensitive topic, but I hope what we did here was put people's mind at ease.
I hope so too, Mike. Thanks so much for hanging out today.
All right, we'll see you guys. Thanks.
See ya.
Thanks for watching All That Matters. Opinions expressed in this episode belong solely to Mike and Ross and do not necessarily represent the opinions of Baird. This program is for informational purposes only and should not be relied upon for any investment decisions.